On Business Incorporated today, we'll take a look at Kenya debt stock as it surpasses 8.4 trillion Kenyan shillings, which is almost $71 billion. Angola partners AFC to boost commodity exports. IMF downgrades Botswana economic growth to 4% in 2023 from 4.3% in 2022. Hello and welcome to the program. This is Business Incorporated. I'm Ini John Mekwa. Let's start by tracking major markets in Africa. Starting with Nigeria, the NGX has sustained Tuesday's negative sentiment as at intraday. The oil share index was down almost 0.5% at 50,194.71. Meanwhile, South Africa's index is in the green, although its index remains high at almost 68,000 points. In Egypt, the EGX30 was trading negative at intraday, losing 0.26%, while Kenya closed deeply in the red on Tuesday. It lost more than 1%. In the Middle East now, investors displayed more positive sentiment here as all the major markets we track were trading in the green at intraday. Abu Dhabi gained 0.26%, while Dubai followed closely with 0.49%. In another region, Saudi Arabia was up more than 0.5%, while Qatar led the pack with a gain of almost 2% at intraday. Let's go to Europe now. Lufthansa ground staff are staging a strike today in Germany and has led to German airline cancelling almost all its flights in and out of the country. Well, joining us to throw more light on this and other issues, we have Daniel Winter for joining us from Berlin. Hi, Daniel. Good afternoon. Well, how bad is the situation at this moment?
Well, up to 20,000 ground staff are going on strike today, which has effectively put a stop to Lufthansa's operations at major airports like Frankfurt and Munich, but really airports all across Germany. That means around 144,000 passengers will be affected by the cancellations. And that's not just today, but also the rest of the week as the airline attempts to reshuffle its schedules. Passengers flying from Germany have been warned not to go to airports to reschedule their flights, as there will be few staff, if any, to help them rebook. Though we have seen massive queues at Frankfurt airport as those people arrive and try and go to the ticket counters to rebook their flights. Now, this comes as Lufthansa was already under pressure even before this strike, scrapping thousands of flights this summer due to staff shortages.
And what are the workers? What are their demands?
Well, the union that called the strike, Verdi, wants a pay rise of around 9.5% or at least €350 more per month for the next 12 months. They, of course, argue that the recent spike in inflation in Germany has made the cost of living for much of its staff unaffordable. On the other hand, Lufthansa has made a counteroffer, €150 per month this year, with another 100 on top of that next year. But the union says that's just not enough. Its members are struggling now, and a delayed pay deal is not acceptable. With the strikes today and industrial disputes in air traffic control and rail all across Europe in various countries, it seems that the travel chaos in Europe isn't going to end very soon.
And how's the market reacting to this?
Well, looking at Germany's DAX index of top German companies, Lufthansa, of course, is one of those stocks that's been struggling, down 6% so far in the last 5 trading days, particularly impacted by that strike, which was announced just a few days ago, and investors could see that coming. And there are also major financial results incoming from Airbus, Boeing, Spotify, the Swedish company, the music streamer, is also announcing today. Germany's biggest bank, though, this is interesting, Deutsche Bank will announce today. Investors interested to see how the company forecasts its earnings, given that interest rates will be rising, which on the one hand is good for banks, right? But demand for borrowing by banking customers is expected to fall as that becomes more expensive. So how does that shake out for banks in the end? And it's going to be a similar story for Lloyds Bank in the UK and UniCredit in Italy, also announcing their financial results, but looking ahead to the coming quarter as well, trying to predict how all of that's going to shake out amid the current financial turmoil. So certainly it's going to be quite a busy day for stock watchers.
All right, Daniel. Well, certainly we'll follow that and the banking stocks, and of course the aviation, the airline there will also be another area of interest. Well, let's move over to London now. We have Juliana standing by. The year of the squeeze is affecting everywhere, Juliana. McDonald's is raising prices after 14 years.
You're absolutely right, Innie. Good afternoon. This announcement was made by the CEO of McDonald's UK and Ireland, Alistair McCrow, in a newsletter sent to millions of Mackie D's, as we like to call it in London, fans and staff, saying that for the first time in years, the 99p cheeseburger, which we've all come to love, is going to be much higher. It's now going to cost £1.19. And if I've got my calculations right, that's higher than the 9.4% rate of inflation, currently at a 40-year high. That is affecting prices up and down the country. We discussed earlier on Business Morning with Vladi that sales at shops, prices at groceries are 4.5% higher. But clearly, when you look at it in the real sense, it is much higher than that. And this story is not just, of course, a story about McDonald's, as you quite rightly said. This is about the year of the squeeze and how it is impacting people up and down the country. As we expected, McDonald's have cited what everybody is citing: inflation, higher costs, labour shortages, and they are sad that it has to be passed down to the consumer. I think the big question now for the millions of McDonald's lovers is the 99p saver menu going to last? The 99p saver menu was brought in a few years ago, so you've got £1 in your pocket. Goodness, I don't know what the equivalent is to Naira. I think it's above 700 Naira at the moment. But you would be able to get yourself a decent meal, or let's say a couple of bites. But you can't do that anymore. And it just does paint a picture of what the inflation crisis, which is affecting the world, does look like here in the UK.
Yeah, true, Juliana. And I guess one lesson from there is £1 or £1 is no longer valued, or does not have the value it used to have, or doesn't have that worth anymore. I guess that's just another way to look at it. And then there's another workout in the rail sector.
You're absolutely right. There is another walkout affecting commuters. Millions of commuters up and down the country have been affected by today's walkout, which involves a multitude of agencies who are represented by the RMT union working across the train network. I believe there are 3 days of strikes. Today, the 27th, Saturday, the 30th, as well as a later date in August. And it's the same reason why they are doing this industrial action. It's because they're not happy with pay offers or the offer of increasing their salary, as well as them not being happy about working conditions. Of course, this is affecting the economy because the government are asking people to stay at home where necessary. You know, if it's not important for you to travel, don't. But the only issue with that message is that tomorrow we've got the Commonwealth Games kicking off in Birmingham, and if you are travelling in from abroad and you're going up to Birmingham from London, it is likely to affect you because these train strikes have a knock-on effect on the next day. So it is a serious issue. As well as the year of the squeeze, we've also got the summer of discontent. Strikes happening absolutely everywhere at the moment, and it's certainly something that either Liz Truss or Rishi Sunak, the next UK Prime Minister, will have to think about very carefully, particularly as wages are not stretching as far as they once used to.
Yeah, well, I think you drove that down there when you talk about the work ahead of the next Prime Minister. Well, how are the markets taking all of this?
Markets are looking pretty good at intraday. Of course, everybody's waiting for the 2:15 local UK time announcement by the US Federal Reserve on interest rates. We are expecting Jerome Powell and the rest of the gang to hike rates by 0.75%, which would be an identical increase to what was imposed last month on the world's largest economy. There's a little bit of anxiety, but nevertheless, the FTSE is in good shape. We've had a slew of corporate updates showing that there's some healthy private sector activity ongoing. At intraday, the all share is up 0.49%. The FTSE 100 up by 0.51%, and the FTSE 250, that domestic market, that's up by 0.42%. In the currencies market, the British pound is currently trading up against the US dollar by 0.31%, though down against the euro by 0.04%, but up against the Japanese yen at intraday by 0.09%, Annie.
Well, at least we'll have a little bit of green there. Juliana, thank you so much. Enjoy the rest of your day. Let's move to Asia now, where real estate stocks in Hong Kong dropped as Asia-Pacific markets traded mixed on Wednesday. Australia's inflation rose and investors looked forward to Fed's policy decision. That's what Juliana just referred to. Property firm Country Garden stock plunged more than 15% after I said it would raise 2.8 billion Hong Kong dollars, which is about $360 million, by selling 870 million new shares. The shares were priced at 3.25 Hong Kong dollars, around 12.63% discount to Country Garden's Tuesday close. The Hang Seng Mainland Properties Index was 6.29% lower. Hong Kong's Hang Seng Index fell more than 1%, and the Hang Seng Tech Index slipped 1.3%. Heavyweight Alibaba dropped 3.26% after popping yesterday after it announced plans for a dual primary listing in Hong Kong. Elsewhere in Asia, the Nikkei 225 in Japan gained 0.22%, while the Topix Index was 0.13% higher. Mainland China markets were mildly lower. The Shanghai Composite declined around 0.05%, and the Shenzhen Component lost 0.07%. In Australia, the S&P AX 200 advanced 0.23% to close at 6,823.2. U.S. stocks fell today after Walmart cuts its earnings forecast, sending other retail shares lower and adding to concern that consumer spending might not be strong enough to keep the U.S. out of a recession. The Dow Jones Industrial Average fell 228.50 points. The S&P 500 retreated also. The Nasdaq Composite declined. We have our correspondent in Washington, Maria Bird, to give us details of Tuesday's trading.
The U.S. stock market fell on Tuesday as all three major U.S. stock indices opened in the red. And throughout the day, it was quite tumultuous as all three indices closed in the red as well. The Dow Jones closed at 0.71% down. The S&P 500 closed at 1.15% down. And the heavy tech Nasdaq closed at 1.87% down. Many investors were concerned about the mixed earning reports that were released, and also very concerned about the Federal Reserve meeting on Wednesday. It is expected that interest rates will increase by 0.75%. It is clear that this could have a cooling effect on the economy and could have lasting effects on the U.S. stock market.
That's right, the U.S. stock market. Everybody's waiting for those figures that we're expecting from the U.S. Federal Reserve in a couple of hours. Well, let's take a break now. When we come back, we'll dwell on the African continent. Just stay with us. This is Business Incorporated on Channel Television. You're welcome back to Business Incorporated on Channels Television. Let's move to Kenya now. Treasury figures show that Kenya will spend 1.36 trillion Kenyan shillings, which is $11.8 billion in debt repayments annually starting from this month. That's likely more than the government's recurrent expenditure, which is projected to be 1.34 trillion Kenyan shillings in the coming year. This year, Kenya will be repaying a loan worth 103.75 billion Kenyan shillings. That's about $900 million to China's Exim Bank, and interest payments to other financial institutions and government. Kenya is among the 23 African countries that are at risk of debt distress. Kenyans are worried. We have Limo Taboy, he's a financial expert in Kenya, to speak on some of those concerns that Kenyans have. Good afternoon, Mr. Taboy. Thank you so much for joining us.
Good afternoon, Ini.
So what are the fears that you guys have, Kenyans? What are your fears?
This is an election season. We have the election in about 2 weeks, but the economy keeps going on. And it's been a big concern over the last few years as the level of debt has gone up. Now, as you mentioned, it's a very high figure. It's now about 70% of GDP. And some of the figures need to be paid off. The first big one, I think, will be in 2024 when the $2 billion Eurobond the first one is due to be repaid. And for now, the government had hoped to do one Eurobond this year to raise about $1 billion, but with yields going up in Europe, they opted not to do that and to instead raise the money locally in the market.
So there are also talks that China may be taking over ports over there because of debts, a default. What do you know about this?
China has been the most visible creditor over the last few years. If you come to Kenya, you come to Nairobi, there's now it's about a 5-6-year-old railway which goes to Mombasa, is very efficient and has 3 passenger trains every day and moves tons of cargo every day. The last 2 months, we've had a brand new expressway built over Nairobi city to speed up transport from the airport to the city. And so they have very visible projects and they're large in scale. And I think the challenge has been that the deals are opaque. Nobody has been able to see, at least outside the Treasury and government, what is contained in these deals. There have been court orders. The president once made a proclamation that anybody could access the deals, but nobody has seen those deals. And then Kenyans read stories about other countries, Sri Lanka, other countries in Asia, who may have situations where their ports or national assets may be tied up in these loans. And I think the concern is Kenyans just don't know what's in these deals.
Yeah, well, talking about secrecy in China's debt, I think that's a common conversation that's been going on wherever we bring that up. But it's election in a couple of weeks, as you've noted, next month. And one of the reasons why people have connected to the present debt situation is weak fiscal management. Is that playing out? Is that a consideration of someone who can better manage the fiscal situation of the country in the upcoming election? Are people taking that into consideration as they go to the polls?
The candidates all talk about the economy, but when they do their campaigns, they're mostly talking about issues that affect the ordinary population. So subsidies for farmers, other subsidies, and the cost of living has been a big issue. So this year we've had enhanced subsidies on fuel, on maize, which is a common staple in Kenya, and on electricity prices. There's an ongoing World Bank program, which has been there for 2 years, where the government has received support, and it's ongoing, and there's extensive consultation between the Kenya government and the IMF. However, the subsidies are due to end, but clearly they will be prolonged through the election period and probably to the end of the year. And the next president will clearly have an in-tray where they will have to deal with the end of the subsidy programs and addressing the debt. There are 2 leading candidates in the election, the current deputy president and the former prime minister. But both candidates they've all addressed the debt issue, but they're very careful in their language. They don't want to use the word restructuring because restructuring is taken in a different way by investors. So they're all talking about they will do other things in terms of budgetary support, in terms of raising taxes in different ways. I think the tax administration has done a commendable job in helping the government at least meet many of its bills, collecting about 2 trillion last year. And so clearly it's the top of people's minds and the leaders, but they were not revealing exactly what they will do until whoever wins will probably have a new president at the earliest in September, and they will now address that properly.
Yeah, we do hope that the Kenyans themselves who are voting to choose, the people would actually look beyond that. Well, thank you so much, Ali Mutabori, financial expert in Kenya, Nairobi, Kenya. Thank you for joining us this afternoon.
Thank you, Ini.
Let's move to South Africa now, where economic growth for 2022 is now projected to be 2.3%. That's up from 1.9% previously. The projections for 2023 remain low at 1.4%, according to the International Monetary Fund. The IMF said that in response to incoming data, central banks of major advanced economies are withdrawing monetary support faster than expected, while many in emerging markets and developing economies had already started raising interest rates. And still in South Africa, the Reserve Bank's Prudential Authority has warned the country's biggest banks that they are at high risk of being used for money laundering and terrorism funding. The warning comes as South Africa was put on notice of the risk of being placed on a global grey list of nations that require greater oversight due to shortcomings in tackling illicit crime. According to the Prudential Authority, the country's banking sector as a whole is at risk for money laundering, terrorism funding, and proliferation financing, that is the funding of nuclear or chemical weapons and their components. In Angola, which recently became Africa's largest oil producer, overtaking Nigeria, they are seeking to add more value across the commodity export spectrum by partnering the Africa Finance Corporation as a shareholder and its 35th member state. With Angola's natural resources in high demand as Europe seeks alternative sources of fuel and foodstuff in the wake of the Ukraine-Russia crisis, the partnership with AFC will help to drive the nation's next growth and development phase. AFC's investment approach is aligned with the government's priorities through its focus on financing instrumental infrastructure projects that could promote economic diversification and resource-driven industrialization. In Botswana, the International Monetary Fund is forecasting that Botswana economic growth will slow to 4% in 2023 from 4.3% in 2022. The outlook depends on the course of the war in Ukraine, the pandemic, implementation of fiscal consolidation, and economic diversification plans. The projected growth is lower than 11.4% recorded last year. However, a successful vaccination campaign, prudent macroeconomic management, and strong demand for diamonds have allowed Botswana to recover to its pre-pandemic output level. The recovery is expected to continue through the medium term, but there's significant uncertainty. Downside risks to this outlook relate to the strength of commodity markets, China's growth, the pace of tightening of monetary policy in advanced economies, and climate shocks. That's the program today. Thank you so much for being a part of it. We'll do it again tomorrow. I'm Ini John Mekwa. Enjoy the rest of your day.